But let's get more on the markets than the road forward for Indian equities. Devang Mehta from Spark Private Wealth Management is joining us now to discuss the way forward. Devang, good morning. Thank you so much for joining in. I'd like to start off by asking you about IT, and there are a lot of divergent opinions on this sector. CLSA last week came out with a note saying that the street is not pricing in the slowdown that is anticipated ahead. They are still ahead of fundamentals. Morgan Stanley is saying, okay, everything is good, hunky-dory, and things would improve as FY25 goes by. Which side of the spectrum are you on when it comes to IT?
Thanks for having me on the show. It's a pleasure to be on CNBC-TV18. But I think, yes, IT sector overall, I think underperformed the better part of the last couple of years. But we have seen the last 3-6 months, particularly not only the numbers have started to show up, also most of the managements that we spoke to, and I think the management that we saw on your channel and the numbers that they exhibited good type of confidence that probably the demand scenario is coming back. Yes, there was a bit of compromise on margins in the last 3-4 quarters that we saw. But I think most of the management commentaries that we heard are turning bullish, be it large cap IT companies, be it mid cap IT companies. I think if you also follow the better part of US, where a lot of ordering activity comes to this IT companies, there also we are seeing bit of green shoots, right? So there is a street which is divided right now. There is a higher for longer interest rate narrative that is going on. But if you look at the data points in US as well, you find a bit of confidence that the consumer confidence, be it the unemployment data, I think all these data points are proving that it's not a major turmoil that we are experiencing over there. So I think probably IT sector is in a point that over a next 2-3 year period, large cap IT businesses can probably from here on give you at least a 12 to 15% type of return. If you expect probably a 15-20% type compounding in the large cap IT businesses, that's probably a little difficult. But yes, for someone who is targeting a 12-15% type of return over the next few years, I think IT sector, particularly the large cap IT stocks and certain mid cap IT businesses look interesting.
Okay, so IT fairly safe if you're looking at a 12 to 15% kind of return over the longer term. Devang, I know you look at autos very closely, and there was this interesting note which came out from HSBC on Mahindra and Mahindra. So they're saying that after Tata Motors announced its intention to split the business, the question is, will M&M follow suit? They have the tractor business, which has seen a pickup in volumes. They have the automotive business where margins have actually doubled in the last couple of years and now stands at about 8.5%, the automotive EBIT. So according to HSBC, the sum of parts is much greater for M&M, and therefore they've gone ahead and raised the target price to 2,300 on Mahindra and Mahindra. Have you spoken to Mahindra and Mahindra on their plans perhaps to, demerge the two entities, separate them, and your thoughts on this possibility?
I think, yes, of course, we have not spoken to M&M on this, but to be very fair, I think a lot of this activities, which is probably a demergers or the business which is right now separated, all these activities start happening when we are at a cusp of an economic revival. And that is also what we are seeing. One, we are seeing auto sector coming to the fore after a long time. It had its own fair share of problems starting from COVID. And then again, in the last 1 year, I think the record sales that we are seeing right from Maruti to M&M to even Tata Motors, the EV business, the JLR business, all firing on all cylinders. Though some of these companies have lost market share, but they've done very well to maintain their margins or in fact expand their margins. The discretionary consumption activity also shows that Mahindra as such, the SUVs they are right now into are doing very well, particularly one or two have seen sales shot out of the roof. Yes, it's very interesting if there's this type of companies get delisted. A pure play valuation comes to the businesses which are into passenger vehicles, and the other part, which is tractor business, that is also not done so badly if you compare it to other businesses. I think if the sum is always larger than the parts, Reema, the point that you were mentioning is absolutely right. So ideally, yes, if you probably demerge some companies and derive pure play valuations on the merit of that business and the numbers of that business, it's always facilitating to sort of expand your valuation. So I don't see any reason why that can't happen, but I probably am not knowing that whether it will happen soon or later.
Right. By the way, pull up the small cap index, and while the benchmark indices continue to remain flat to a slightly negative bias, the small cap index is now down over 1%, and that has continued to remain an area of concern throughout last week. The small cap, there you can see lowest point of the day now for the small cap index, and it is down now well over 1200 points, or close to around 8 to 10% from its peak, which was on the 8th of February, which was 16,691. That was the peak on the small cap index, and there you can see now further losses coming in for the small cap index. Is the third out of the last 4 sessions where the index has declined 1% or more in a single day. Devang, speaking of small caps, there has been a lot of opinion coming in about stretched valuations and stocks running up beyond fundamentals. Do you share that worry within the small cap space? And I would include the mid caps here as well, because there are certain moves seen in those stocks as well.
Honestly, if you ask me, we believe that there are market leaders and emerging market leaders across the market cap spectrum, be it small cap, be it mid cap, large cap, or mega cap. But yes, there has to be certain gravitational forces which has to come to the fore, right? So money making was becoming extremely easy for small caps and mid caps. So a bit of a shift of capital from small mid would have happened to large. Ideally, yes, there has to be a bit of valuation cool off and even price point cool off that we can see over the next few I think trading sessions. But my sense is that if probably are wanting to see your returns over the next few years sort of give you good returns, I guess that you need to be across the market cap spectrum. There are a lot of large caps which are exhibiting value, but there are, after this correction, maybe a 3-4% correction more on the small cap index, I think a lot of these companies would start to look attractive. I wouldn't paint all the companies with the same brush. Yes, there is a time now you have to differentiate the men from the boys. You can't be into everything and anything. You need to now again cherry pick and buy great businesses which exhibit return on equities, which probably show you good revenue, profit, EBITDA growth, as well as companies which are sort of zero debt or low debt in nature.
Since we are separating the men from the boys, any pockets where you would recommend profit booking, any stocks, any themes that you would like to highlight where the risk reward is no longer favorable?
Ideally, most of these companies which are hugely debt-laden companies which probably have also turned around but still don't exhibit that type of fundamental. So I would not paint any sector as such, but some companies which came to the fore just because the markets were doing well, because the sector was doing well, there you need to be ideally with the first, second, or third in the sector. You probably would have, your mistakes would have also paid off in certain companies. So that type of businesses which were sort of doing well, hoping against hope, those are the businesses you should sort of just clean and come into some great and good businesses.
All right, Devang, we leave it at that. Thank you so much for joining in and sharing with us your views on the markets and on specific sectors as well. There was Devang Mehta there of Spark Wealth Management. While the broader markets continue to struggle a bit, the Nifty Pharma Index is the top sectoral gainer in today's trading session. That's up around 0.7%, and that is one of the sectors that is an outlier in today's trading session. Time for a short break here on Trading Hour. Up next, we'll discuss what's buzzing in the commodity space. Manisha Gupta will join us on the other side. Stay tuned, we'll be right back.